Hi Marcus, it's a pleasure to have you with us today. Would you mind telling our audiences a bit more about yourself to begin with?
Yes, my name is Marcus Grubb. I'm the head of market development at the World Platinum Investment Council. It's an organization set up by the 6 largest platinum mining companies, and our job is to do 2 things. It's to explain about platinum and the benefits of platinum in an investment portfolio with research and data, and secondly, it's to develop the market for new investment products all around the world for platinum.
Our audiences tend to be a bit more familiar with gold and silver. So as an investment, what makes platinum different from gold and silver?
Yes, that's a very good question, because I think there's clear similarities between the 3 metals, but also some very key differences. I think the first thing is that platinum is quite like gold in the sense that it has investment properties. It has tail risk hedging properties, or what you might call more for the individual investor, more like insurance properties. When other assets fall in price, typically platinum doesn't do that. It tends to go up or decorrelate from the general market moves in bonds and stocks and other assets. Secondly, it's a precious metal, very, very unique and scarce, in fact more so than either silver or gold. There's much less platinum in the world in terms of reserves and resources. It's tougher to mine, more expensive to mine in general terms. It's less available. So in general, often platinum can trade at a premium to the other metals, in particular to the gold price, because it's something like 30 times scarcer than the available amount of physical gold there is in the world. So I'd say for these reasons it has some very similar properties as a currency hedge, as an inflation hedge, has the same relationship to the dollar, the same relationship to inflation as gold. If inflation rises, the cost of production rises, therefore the platinum price tends to rise in periods of inflation. So in that sense it's an inflation hedge like gold. But I think the key difference is that platinum is also an industrial metal in a way that gold is not. Gold is maybe 10% industrial. Platinum is probably 30–40% industrial. Autocatalysis for cars, and then industrial uses outside the automotive industry. So it's kind of like gold as a precious metal, as an investment metal, but with more pro-cyclicality with the real economy. That would be how I would tend to look at platinum. And the final piece of the puzzle is it's got a slightly higher volatility or variability than gold, but if you look on the very long term, 40 years, 30 years, 50 years, it actually has a higher rate of return than gold too. And again, that's what you'd expect. Higher volatility, but also higher return.
That's very interesting. In your opinion, what is the benefit for owning physical platinum as opposed to paper platinum?
Yes, well, I think that's very key in that, of course, with physical products in general and physical platinum, the key thing is you have no credit risk, you have no counterparty risk, unless, other than the vaulting risk, but that's not really a counterparty risk. So I think that's the key. You're not owning a securitization, you're not owning a derivative, you're not owning a piece of paper. You're owning physical platinum. And as one investor said to me, a kilo is a kilo. Whatever environment you're in, wherever you are in the world, if you have that kilo bar, it's worth whatever a kilo is worth. Whereas I think, as with many other paper products, some of them are physically backed, and there's merit in those products too. They're for a certain kind of investor. But there is always an issue of credit risk, counterparty risk. There's always an issue of the moving parts in creating those synthetic instruments or those securitized instruments. So I know for some investors, pure physical bars or pure physical coins is the only way they will invest in precious metals, because that's where they see the value as a counterparty risk hedge, as a hedge against the financial system, as a hedge against all kinds of other risks, and therefore you need to know you can get hold of your physical metal.
That's a very good way of seeing it. In terms of supply and demand for platinum, what are some trends that you are seeing in 2016?
Yes, I'd say the year is off to a pretty good start for platinum and for gold as well, of course. We've seen a good increase in the gold market. I think with platinum you're seeing still strong demand in the car market, which I think when you look back to some of the negative media about diesel cars last year is very positive. And you've seen a string of statistics suggesting diesel car demand and vehicle demand is actually rising in most markets. So a lot of the scare stories about diesel car demand falling have proved to be wrong. And that's important for platinum because out of an 8 million ounce market a year, autocat demand for diesel cars, where the platinum is used in the pollution control systems, is about 3.5 million ounces a year. So it's a very significant amount of platinum demand. Industrial demand is up as well, looking quite strong. And then jewelry demand continues to be strong. It's over 1 million about 1.5 million ounces a year of the 8 million. Strong growth in the main markets, even in China where the economy slowed down, jewelry demand continues to be very strong for platinum. So it's looking pretty good. And then on the investment side, you've seen some really good stories. There's been a big increase in investment demand for platinum in different countries around the world, in particular in Asia, in Japan, in the ETF market, in the physical bar and coin market. You've seen some improved sales for platinum in Switzerland and also in the United States market as well. So although it's much smaller as an investment metal than gold or silver, especially since the start of the year, you're starting to see a pickup in investment demand. And I hear even here in Singapore, without talking any figures, there's been quite an improvement in platinum demand as well.
That's fantastic stuff, Marcus. Thanks for giving our audiences a glimpse into the platinum market. Maybe let's talk a bit more about gold.
Yes.
So our analysts have estimated that the amount of vaulted gold, physical gold left in London is down to about 6,500 tons now. Firstly, do you share a similar view? And if you do, what do you think is the cause of this?
Yes, it's a hard question to answer, I think, because these numbers are quite opaque. And I imagine your analysts have looked at central bank numbers, at the ETF gold held in vaults in London. Then there are allocated and unallocated bar accounts for high net worth investors. So it's quite a, I admire your analysts' work for doing that, because I know from my past experience it's a difficult job to piece together that information. So I think it's hard to tell, from my perspective, I'd say it's hard to tell how accurate that number is, but it's probably the best estimate available because I haven't seen any other estimates. I think the fact that your analysts have identified a decline in the amount of vaulted gold in London is almost certainly correct. The magnitude would be harder for me to decide. And the reason being that since we saw the fall in the price of gold in 2013 and afterwards, and even until this quarter, it was a pretty weak few years for gold. We know that a huge amount of gold was taken from London. For a while, the UK was one of the largest gold exporters in the world, as the 400-ounce bars that were vaulted mainly in London were exported to Switzerland, refined down to the kilo bar standard, and then sent east to India, China, and other Asian markets, where there was very strong demand for gold, even while the sellers were mainly in Western markets, among the vaulted holders and among the ETF investors. So I think that movement of gold from west to east is absolutely correct. I think it's highly likely the stock of gold in London has fallen, but I think it's very difficult to estimate how much.
In light of this, we're still seeing phenomenally high volumes of gold traded on the London OTC market compared to the physical available gold. Why do you think this is the case?
Well, I think it is partly because that flow of metal is continuing from west to east, and a lot of that metal will be originating either in New York or London, and then and it's traded there on a daily basis, the physical trading and the forward trading. So I'm not talking about the futures trading, which is mainly New York, but the OTC physical, I think, is largely, as we know, is largely based in London. And I think the result of that is a lot of the gold is still being sucked eastwards, and I think you can see that still in some of the premiums in Asia, not so much in India right now, where there's currently been a discount. But in Shanghai and some of the other Asian markets, there continues to be a premium for physical gold because the investor is buying more, whereas in Western markets, they're more ambivalent about gold. The arguments about the Fed raising interest rates, recovery in Western economies, being sustainable but slow, that has meant some investors have been selling gold, and they had elevated holdings of it in the credit crunch about 5 or 6 years ago. So I think there's been a steady stream of sellers in Western markets that's facilitated the trading in London, and then that gold has moved eastwards. But it does mean, I think, a lot of stock is now building up in Asia, and the liquidity of Asian markets is increasing. You look at the Shanghai Gold Exchange, look at the international board of the Shanghai Exchange, and of course the flows from markets like Singapore, which is now becoming a major trading hub for precious metals. I can't divide numbers, but I do know some of the numbers for the market here from some of the wholesale participants, and you're definitely seeing an increase in volumes here as well. So I think there's definitely a transfer of liquidity happening from London to Asia, that's for sure.
This was very insightful stuff, Marcus. Thanks for being here with us in Singapore today, and we look forward to catching up whenever you're in town again.
Thank you very much. It's been a pleasure.